Hey everybody, it's Bill. It's Sunday morning. I have a nice cup of coffee and I thought I'd do a weekend update. Um, Happy July the 1st. Well, the global banking system refuses to allow the Ponzi scheme to collapse. So, once again, based on no significant news coming out of the Friday European summit, the market rallies almost 300 Dow points. So how does that look from a technical analysis standpoint? Well, combination of a couple of tools here, old school moving averages. We are above the 200 period moving average here on the ES, which reflects the S&P 500. We've popped above the 50 period moving average on Friday, which conveniently kicks in all the bonuses for all the traders at all the banks on the last day of the quarter. Isn't it amazing how that happens? Um, Looking at the Wave Rider Bill swing trade tool, trending tool, we are technically in an uptrend. We have green dots here, and we have an arrow showing when the trend reversed to the upside. Actually, the gray dots are depicting a trendless, uh, very weak trend at this point. But all the same, the last trend that existed was to the upside, so we can continue. We can assume that will continue for at least the short term. Interestingly enough, if you look at the Fibonacci's, they almost played out exactly right. The last low was here at around 2060. You paint it up to the previous high of 1357.58ish, and you can see we had a retracement exactly down to between the 50 and 60% Fibonacci, and then it bounced back up. So if you follow that logic, which is what it's supposed to do, and you draw the next set of Fibonacci's, so from this low to the high of Friday, theoretically, we should pull back to about 1330 before we start going back up again. So my guess is possibly some consolidation, maybe a continuation of the pop on Monday, or it might peter out because people have figured out over the weekend that the whole European thing is a sham. Don't know, but that's what it looks like from a technical analysis standpoint. Another thing I thought I'd do is show you the results of the swing trades from last week for the subscribers that subscribe to the swing trades. First one I wanted to show you was TDS, which was Monday's long pick. Here was the signal. The way you enter it is you wait for it to, in a long pick, obviously breach the high. It did that on Tuesday. You set your stops down here at the low of the entry bar and leave them there. And you can either increment them up, lagging one day at a time to the lows, or you can just leave them alone like you do on the HLB trades. Really doesn't matter, it's up to you. But anyway, this one worked out pretty good. Entry was about 2086, 87-ish, and if you bailed on Friday and you were riding it, up to the top, or you used this Keltner channel as your exit tool and got out at 2148, you made about 70 cents a share on that, which isn't too shabby, almost a point. And then the other trade that fired off was also a long. That was on the 29th, I believe. Let me see here. Yeah. So signal was on the 28th. It opened up above the signal line, so that was a valid entry point. If you got in right at the open, you would have picked up a point and a quarter on that trade for a swing trade. Now, close all trades on Fridays and don't hold over the weekend. That's just a general rule that I use, but that's how the swing trades worked out. Anyway, that's the update for the weekend. Hope you like it. If I have time, I will continue to do those. And thanks for the current subscribers, and hopefully some new ones are watching these free videos. And good luck, and we'll have some more fun trading on Monday. Bye.